All right, my friends, as we slowly let everybody pile in here, we're going to wait about 5 minutes so you can fast forward any of this live record into noon if you want. So we're just going to sit around for a couple minutes here. Get ready for the stream. We'll start right at 12 Central, so about 3 minutes or so. Good afternoon, Terry. How are we doing? Hopefully the weekend's treating you well so far. Great. Good to hear. Good to hear. We do get a bit of YouTube lag at the moment, almost like 11 seconds worth. So if we're a little bit slow to questions or replies, we have yet to get a better speed here. Glad it's going good. Two more minutes, we'll get started. We'll fire up here. We do have a little bit of stream lag. So anybody in our group, in the BRT group, tuning in here, this will be recorded just in case anybody misses out. It's going to be a live section on the playlist on YouTube. It'll be under live right on the homepage there. So no worries. You will not have to miss it. Good morning, friends. About 1 or 2 more minutes. Let people pile in here a little bit. What's up, Joel? How you doing, buddy? Hopefully well. Morning, everybody. Hopefully the weekend's been treating you good. Holy. Cursor scrolling crazy. All right, guys, we'll get into it here in a minute. What's up, Rob? Always dragging it out, buddy. Nice and slow, letting everybody pile in here and make sure I can get the stream working correctly. You know me and technology. Over here, we're anti-influencers. We know nothing about technology, horrible at anything that has to do with social media, but thank goodness we can trade, right? I suppose you're a little bit behind, huh? Yeah, you're like 2 hours. It's like 10 in the morning for you. It's noon. Let's go. So welcome to a little bit of how we view the sentiment market, or at least how I do in some of the pieces that I've picked up over the decade of doing this on a more fun scale sentiment on the market. So sentiment, we're going to be covering sentiment versus seasonality, more seasonality, which creates sentiment, right? Now, a couple things to remember out of this. Seasonality, it's just a condition of the stock market, okay? It is not a one-all indicator. Oh, it always does that. We might find a ton of instances because it is high probability in seasonality, but we have to back up seasonality and sentiment with technicals, right? We can't just shoot and hope and pray and spray, right? We don't do that. We have heavy sarcasm today. We have a big use case for stacking catalyst, and we don't want to go into this where we have zero technical along with just sentiment, okay? So seasonality is the condition of the stock market month by month, and there are certain months that do certain things for certain reasons. Now, starting off in an election year, we're going to kind of touch on presidential, and then we're going to touch on some of my biggest seasonality points that I use in my large accounts for swing tradings, options, selling credit spreads, so on and so forth, that I've learned. So right off the bat, we'll start with presidential, okay? Now, in the presidential election years, we know a couple truths, right, on seasonality. And this goes in a 4-year and 2-year cycle, according to most historic values. So let's get into looking at some of that. Now, right now, seasonality, and again, technical analysis with what the hell the Fed's doing, emotions, a lot of things come into play here. So we're going to be stacking these catalysts. Generally speaking, on the end of an election year, you're going to see the stock market to the upside, right? On the course of electing a presidency. Now, they control the algorithms, and under no way, shape, or form would they be coming into a hey, reelect me presidency at a bad term on the market. So historically, in a 4-year period, if you go from 2024, you come back to, 2020, even with, COVID coming in from that 2019 and ending, we ended up real good. Quantitative easing, go right back into the president election 2016, just another 4 years back, big dip in the beginning, ended green. Okay, so on a president election year, at the end of it, during the election, the market will get fluffed at the end, right? There's a huge historical value. We knew that. So a big part of our trade sentiment for even this whole year was really big on, hey, we're just going to go straight up because they're going to manipulate it up because it's the presidential re-election, right? We're coming to the end of our 4-year term. So very small bits and pieces there are going to pull out from the president election. Now, did you know halfway through the presidential elect, the midterms is more often than not the worst part of the presidential election? So if you guys have been in BRT for a long time, I had a few instances where we came into 2022 and even from a numerology and astrology base, we had a midterm base where we knew that 2022 was going to be bad. Well, that comes to the term of the presidential midterm, right? So if we got elected in 2020, we're not going to get anything till 2024. Half of that is obviously 2022, right? So if we're looking at this from a halfway point, again, seasonality, if you don't know anything about this, we're just covering the basics of the presidential, okay? Here, so 2022 is halfway point. Look how poor the market did. Now, coming into the next 2 years, generally we can see a boost in that. So same applies anywhere. So if you go back to 2020, as we ended, had that big push up, and then coming into the halfway point of 2022 comes down, hits moving averages 23, and then 4 coming into a new presidential elect, we're up high, right? That full cycle, you can see again, 16 and beyond. So halfway from 16, we got 14. That's a womp year. 15 up, 16 end, strong 16, right? What happened in 17, or 18, I should say? 18. Look how bad 18 did. Right? Is that in the middle? Right? 16 to 20, right in the middle. So what do I do in these instances where on the chart we can see halfway points through presidential elects doing poor, right? One of my first instances that I do is I'll sell call leaps, or if I want to protect my assets in long-term holding in stocks, I will sell call 100 shares at a time, one call calls to collect credit, right? We're going to sell credit. So for a small instance here, so coming from 21 into 22 that we had to the downside, coming into 22, I sold calls, right? And you could do this on your stocks, your Big Mag 7. I use it on indices. So we're going to sell SPY and QQQ. Where are we going to sell them? Well, I mean, we could get real dangerous with it, and you could sell calls. So when you sell a call, if you're not familiar with the options, you're picking a price that the price action will stay under for an allotted amount of time. And if the price action stays under the price you have picked, you will collect the credit that you have sold the spread and or nakeds for. We do credit spreads. So saying that, coming into 2022, so here's that transfer. We're at all-time highs. So what I did is I looked over and I said, oh, well, 480s, 460s, those are probably the calls I'm going to sell for the year. So leaps. So this is what we did in 2022. We came in and we said, we're going to sell for an entire year's worth, 365 days out on those contracts. We're going to sell calls. And at the end of the year, we're going to collect that premium. So for an example, I would say, let's say 1 year out, 365 days, I'm going to sell, right? Let's just say 460s, 470s. What was the top of the market here? 480. So I'm going to sell 470s, 480s. I know we're not going to be at all-time highs, or at least we have a very good chance to not go over this. So selling calls at 480 means I'm going to make money at the end of the year, which can be a huge premium depending on what your spread looks like, and if you do it naked or in a spread. We're gonna stick to the topic of seasonality here. We're not going to go into a big options breakdown. But when we sell this, as long as the price action stays under that call, we get paid at the end of the year. Okay, and that would have worked out perfectly fine in the last couple. Look at 18 here, same exact thing. Did it peak up to all-time highs? Sure, but did it end the year good? Generally, it will not, okay? So 17 into 18 here, I would have sold at highs, would have gave it all year. Did it come up? Did it come all-time highs? Would I would have panicked here? Not really. I mean, it's the SPY. We're not moving all that much. And the all-time high prior ended up being 286.80, and it pushed up to 294 or whatever. That's not a big deal at all. So we washed it, and let's look at some of the oscillation again. Indicators that we always use here at BRT to help us assimilate. So as we said in the beginning of the video here, we are going to use technical analysis no matter what with seasonality to not get us scared out of these positions. So you could see some huge RSI overburn here. This is on the weekly, right now to keep it nice and simple, where in this instance in 18, we had that all-time high, and then it went a little higher, but the RSI was telling you that there's no reason that we couldn't pull back around. We're very near overbought territory. We weren't sitting on a support like 50 RSI in the end of the year where it could have got a bounce. We weren't sitting at a oversold property here, coming into a big rip rally. We were saying, at the end of the year here, we're talking October. So we have November, December, and January coming into, so 2 months plus, to the end of the year here. To note that the RSI was trapped in the bottom of the channel here. Okay, so the relative strength index was telling us that we're on that downside. Now, I don't use this indicator, and again, every indicator is take it as a grain of salt, right? And you can use this with RSI, with MACD, with anything else, and we'll throw it on here just for the likelihood of use. Maybe you like it. Just seeing it a little clearer, maybe it helps you identify it. Now, this is a sentiment indicator, which is it's literally what it is. Poor sentiment, bearish, it's overbought, oversold, same thing. So you can keep an RSI, you can keep a MACD, but sentiment is going to be there to help you out. And notice that sentiment was way high, right? Here, dropped way low, and it was under the 0 bar. So sentiment was poor, right? We didn't have a lot of consumers sitting in the market going, this is fantastic, right? And at the end of the year, it was at all-time high. But the relative strength index dumping into October in the bottom channel, and your sentiment being way good to pessimistic, right? And then the same thing. In case you can get this from the RSI, the MACD, sentiment zone oscillation, these indicators are going to look relatively the same. And we're going to go over a little bit later on sentiment zone oscillation. But so those are two very small pieces to presidential puzzle. I want you guys to go back on your own and kind of look at the 2-year and the 4-year presidential elect, right? Now, what other instances do we know that can affect this? Well, it's Fed and rate cut, right? So we had this big thing during COVID, and we had this nasty, the world's ending market. What happened after that? Quantitative, say it with me, money printer, easing, right? So that year, there's no way you could have missed making gains on your long-term stocks or long-term put sales. Why is that? Well, let's inverse a little bit. We talked about saying, hey, at the midway point of presidential election cycles, we know that it's bearish. We should sell calls. Well, what's the rebuttal on that? Well, if we know that 22, let's just use our nearest year here, halfway for the old Biden, and then 3 and 4 is coming, the next 2, right? We know that we are back to bullish. What other indicators right now are telling us that we're going, hey, sentiment is up, market can come back, so on and so forth? We have a big piece of the pie. Sentiment and seasonality is number 1, okay? It's number 1. It's part of the psychology. 2, technical analysis. We're going to move into what do we have for technical analysis on the halfway point. We know 22 is going to be bearish, or at least we had a massive chance to be bearish. We move into 23. What can happen? Could it continue down and blah, blah, blah? Sure. Does it usually? No, because that year 3 is generally one of the better years without outside force coming into the market. Outside force being, Feds keeping the market up with money printers, war headlines, you name it, huge contracts, you name it. There's a bunch of different reasons why the year 3 on the presidential election is going to be great. And then leading into 4 is obviously the fluffed up manipulation, as we covered already, because nobody wants a red market as a reelect, right? So to flip the script on bearish halfway point, we have year 3 and year 4. We sell puts. Technical analysis gets mixed here. Like we said, what do we see? Weekly 200 SMA. That was about the bottom of our bearish presidential election halfway point of 2022, right? So if we sell puts at that 200 SMA, we collect anything above 380 is fluff in our portfolio, and we can put it out 3 months, 6 months, a year, whatever it is. Generalized sentiment will take over. Now, technical analysis matched with sentiment. Let's go technical analysis, right? We got higher lows on the RSI. We're trending back into the top RSI. We spent very little time on the correction here, and back to bullish, right? To come from year 2, nasty, 3, bullish. But what about this? We're gonna change speeds here. We're gonna go into the daily chart. We're gonna talk about my favorite number 1 seasonality point for swings. Okay, so dial it in here. We covered a little bit of the presidential election. We're gonna go. This is part 1, part 2. We're gonna dive deeper into these as we move into our live streams on Saturday. This is only part 1. Now let's move in a little bit deeper on the daily. Any questions you guys have on presidential seasonality, post now, and I'll catch it at the end of stream. Okay. Good morning. What's up, Pete? How you doing, guys? I can see chats once in a while if I come down. So my favorite, what is Brandon's favorite seasonality? Okay. September. Okay. Why September? And we had a bunch of swings, and we're going to go over a bunch of different reasons why we had some reversal calls. You can find it on the YouTube, and all my friends that have been here for quite some day, they know exactly what I'm about to get into. So we're going to edit some studies real fast here. Just want to get it off the bottom there for the sentiment here. We like RSI always, but I'm just going to shrink this down for now and get it big. My absolute favorite go-to month is the Divine 9, the ending cycles, okay? Right around September, October, November, there is a pullback almost always, right? And there's a call sell pullback, there's a dip buy pullback, there's a take profit. Why does it always happen in September? Well, there's a couple different reasons why that seasonality happens. Now, historically, long-term investors, hedge funds, 401ks, it's a cut loss, right? They will cut underperforming assets. They will cut underperforming equities, ETFs, whatever, for tax loss harvesting, okay? To cut losses on taxes. They're going to harvest tax losses, right? That causes a drag in the market, and they generally do this around September. Now, that seasonality is my favorite because of the consistency that it has in the market, 1, and 2, the numerology and astrology factor the 9 has in September, which I can't go into on stream publicly. So let's take a peek at some of these October instances where this ends up being one of the biggest and best, right? So in 2023, I called a huge correction for our group, and you can date back some of these videos. I'll get better at dating these actually for the YouTubes and whatnot, and we'll get there best we kind of can over time. So right here, we're coming into, from August to 9, 8 to 9, right? And August is where you want to start looking at it. August, eyeballs, okay? Eyeballs are on the market in August. Coming into September, October, and reversal November, just like the N in November, right? It does this really cool N a lot of the time in November. Just a joke, not a pattern. We will see a pullback for tax harvesting, right? Tax loss harvesting, big old funds. And this comes in to view usually on the dip on August, and then September comes in 9 and comes in and puts in a lower high to lower low. You know me in threes in the big market. You can see this 3-month pullback, 1, 2, 3, right? N November on the chart here comes up. It's not quite November there, but you know what I mean, coming into the 11. This seasonality point is my favorite. Why? Well, we generally get a bunch of people taking profit. It's 9 months into the year. Tax harvesting and general sentiment of, hey, we're coming to the end of the year, let's take profits, right? There's still retailers that take profits. They run 6 to 8 month trades from the opening quarter in January, which again, hedge funds, big institutions, they plug in their money. We're going to cover that in part 2 and why we can tell what the market does in January and how much the hedge fund puts in and how January closes. So stay tuned for part 2 on that. The 3 down right here is the biggest, I should say, most consistent. So we can just go back to any old year here. Let's go back to the year we just had. What's this big dip in the year, right? March, April, May comes up, does the big push shy at the 100. It's not huge, right? Because this doesn't always happen, because what else? There we go. Couldn't move over. What else generally happens besides seasonality? The Feds interrupt. We have money printing. We have all these other things. But we still always get right around 9 pullback, okay? July hits, bam, we get the big corrections all the way back up to lower high. What is it? 9 time, baby. Right here. Big pullback into September. You can see the consolidation. August. Boom, September. Candles all the way down. Mid-September, picks right back up. Doesn't quite get the highs, has to consolidate, okay? Now, this was a very fast one. Well, we had no cut Fed rates. We were getting pumped up in a market. They weren't cutting rates yet, so we had just a magnet to the upside on squeeze potential, right? But still, September 9 still pulled back, right? So I knew there was at least bearish sentiment from seasonality. So if we were closing out August, moving into September, and we're trying to plan these day trades that we love to do so much, we would still be coming into, okay, here's the end of August. It's September. Let's get on I usually go on the weekly, right? And for this year, I would come down and say, all right, well, here's that September. August ended up on that big high weekly. You know us for fibs, right? Look at these giant weekly candles. High lows. What did those giant weekly candles need in August? Ooh, the elite strategy, a golden pocket back test. What happened in September? To the penny. Okay. Only example and only takeaway there is August to September. It always has a great chance of happening. Not always does, but has a great chance of happening in September no matter what, even if it's small. So this year, when we think about the psychology of this year, the money being printed out, the pump, we had a small pullback, right? Now, bigger ones happen in, you guessed it, bearish years. So what do we stack up there? Let's go to 2022 right here, right? So 2022, make it easier to see on the chart here. It's right in between here. So this is all 2022. We know it's, generally speaking, a terrible, holy, I can't read. We got to move over a little bit. I was like, why is that ending so high? Let's activate this draw. Let's move it over one. Perfecto. So we have this bearish sentiment. Now, the biggest takeaway here, because when August, September came in, we had that last leg of lower low. Now, not only do we already have a high probability chance of coming down, because it is midway through the election, which we covered, we have the September, right? The September. Now, what did we say in the beginning of our stream? We match up. I got to stop doing that. There we go. We got to match up. I needed to get the indicator bigger. Seasonality with technical analysis, because we need multiple instances across the board. We stack catalyst here at Boilerroom Trading. So if I have one RSI telling me one thing, the MACD telling me the other, support telling me one thing, resistance telling me the other, and we have 5 bullish, 5 bearish catalysts, we're not going to get very far. But if we have 8 different bullish catalysts, 2 bearish, we have good sentiment. We know which way it's going to go, okay? Or at least we have an opportunity to know. So what does it look like here in August, September? On a bearish presidential election midterm year. Wow, that's a freaking baby of a move right here. 200 SMA resistance matched with seasonality of August coming into September, matched with overhot RSI, okay? Now, I could sit here on the screen and put out the fibs back here for this golden pocket that was never tagged here, blah, blah, blah. We're not talking about that. We're not going to go deep into TA. We're just pairing some TA with seasonality. So great TA, 200 SMA, fantastic. What do you see here? 3 push, right? 1, higher high. 2, higher high. 3, market loves the 3 trend, okay? Now, 200 SMA, hot RSI, right in the middle of August. What a time to be alive, he says, right? And what a time to be able to... I'm so bad at this MacBook Pro, sorry. Every time I touch it, it goes flying, and I'm not used to the sensitivity. What does that tell you there? End of August, RSI hot, and then it has continuation. So what do? You sell calls if you want to hedge or take short swing positions, right? And for me, I would just, for futures trade, doesn't matter what it is. You could buy 5-month out contracts. You could just short ETF shares, whatever you are comfortable with. What's your trade strategy? Futures guys, options guys, equity guys can all get away with lots of stuff here. If you are a holder, a long-term holder, and you had 500 shares of Tesla, 500 shares of Apple, you could sell calls against the big Magnificent Seven that you know would have a great opportunity to roll with the S&P 500, right? You could sell calls up here saying, hey, we're peaking out at 430. It'd be a good idea to sell 430, 445, and 440 calls for 2 months out, or at least a month out. Now, you don't have to hold those to expiration, and the contracts go to 0, which means you collect all the premium percent that you got. You don't have to. It can come down all the way here, be up 20, 30%. If you're happy with that, close out a portion. If it goes down a little bit more, you got 40, 50, close out another portion. Either way, you played the sentiment correctly. Now, let's go look at a couple other different instances here where this happens, okay? Even on the bull years where it's fabricated, okay? COVID, for example. We know what COVID looks like, right? Big, nasty COVID. So COVID here, I might have to try something new a little bit here so my eyeballs can follow here and I don't go nuts on the mouse. Bam. All right, nice and easy to see. 2019 in the gray. Still sick, excuse me. COVID hits early 19, lockdown, the world's over. Great. Huge reversal, quantitative easing, free money printer, goes bonkers. That means it's never going to work, right? The feds are against us. Let's take a peek. August, 8 to 9. August, November. Get it? Okay. What else are we matching up with our technicals? RSI, way overbought. What do we need? What's an elite algorithm pattern you see right here? Magnets, my favorite. Price action, gapped over the 100 EMA daily. No price action touching. Shy. 100 EMA is my favorite. Always. We say this in daily. August, September hits. RSI is cooked. We're at all-time highs. We have no 100 EMA tag. Oh my God, what's the target? It's so hard. 100 EMA, right? And I know because the pattern's already there, the seasonality is already there. It looks so simple. Going back, anybody can chart this stuff out. Literally, we could teach monkeys to do this. But this is pretty easy compared to most technical analysis, right? You're understanding this very clean. You're grasping where that 8-9 comes in. You're grasping why we're oversold. Coming into that, money managers, yada, 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 they still do the bounce, right? Huge. Still happened right there. What was, couple technical takeaways. And again, you could trade. This is one of the big 3 yearly trades I take. We're going to go over more of that in part 2. Number 1 is this one. Let's look at it again on something that even didn't have a crazy year, right? This is 19. So 3rd-year term, right? We didn't get as much volatility here, not even as much range. Let's look at it from another standpoint right here. What happens matching technical into August, September, right here, okay? It's this jam right here. August, consolidation lows. This is a little different than we've seen. September still popped up, but did it go any higher? Nope, we still had our September to October red, right? Excuse me. And this helps with day trading immensely because when we're ending August coming into September, I'm not looking for big old all-time high pushes. I'm looking for short volume, right? I'm looking for indicators that are just lackluster, lower highing like it is right here. I'm looking for gap and goes in the technical like it did. I'm looking for double tops leading into September, right? All very good things. So I'm just giving you examples that you can pick out each and every one of these months here. In any given year, even at low volatility, even in crazy bullish or bearish scenarios, you'd be very hard pressed to come into any one of these. Even I'm talking back when I was a baby trader right here. I was only doing this for like 2-3 years right here. Didn't even know what this meant. September, hot. September, wham. October, end, gone. Okay? That is my favorite seasonality pick. Any questions on that or concerns? Let me know. But that seasonality piece is massive. That is a huge one. That is something that everybody should be paying attention to. Go back on some charts, practice a little bit of that seasonality, so on and so forth of that monthly, okay? Now, let's see my notes here. This, it doesn't really have a name like Sell Away May or Santa Claus Rally or, Jump Off a Cliff July is my favorite. That's just a personal one, but I'll talk a little bit about July's jump as well. Now, July has a seemingly interesting tendency to do the same thing that the 9 does. It's a 7. And I'm not going to spend as much time nearly as this is not one of my favorite ones, but I do want to touch on it. So if you go to your July sentiment, do the same thing, okay? Come into July here, hot, pulls back, right? And then August has that continuation. You see the big 3 I just drew, 1, 2, 3. So as early as July, some of this stuff can take place. Not always, just keep that in mind, okay? The 8-9 to 10-11. 8-9, first move leg watch down, 10-11. At the end, right, reversal attempts. Now, let's move into the year here. Now, I want to talk a little bit about January sentiment, and I'm not going to touch too much on this one because I want to get time for questions. If you guys do it, we're going to do about a half hour each one and then a little questions underneath. We're almost there. So January can tell us a lot. Now, what's the deal with January? Well, as we said a little bit earlier, tons of the hedge funds, 401ks, Roth IRAs, doesn't matter what it is. If you are a retail investor, a big boy, you put a lot of money into the market in January, okay? And if January is a bad month, statistically, we're not going to end up very large to the upside a lot of the times at the end of the year, okay? And this has only been happening, I'd say the last like 8 I wouldn't even say 10, maybe 6 to 8 years, which is very clean that I've noticed this and picked up on a few other investors that, you read Sentiment Trader and you read a lot of other, reports, and they've brought this up as well. So 22, again, seasonality, sentiment, we're just stacking catalyst here. If we had a bad January, right? First 4 candles here, we didn't have a terrible, it just closed low, right? And then look what happened at the end of the year. Vice versa, 23, January closes up very high. We get the pullback at the end of the year, closes high. So you can kind of see how the big boys, the hedgies, they come in, strong January, super strong close. Strong January, super strong close. We can go back to a lot of different years here, and you can see how January played out. And again here, weak January, right? Weak close of the year. Again, here's another instance where it was a little backwards, right? But we know 15 to 16. What's the catalyst, class? 2016 is a presidential year, right? So even if it did have a terrible January start, what did I say about seasonality? The manipulation of seasonality in psychology. It takes precedence over a technical analysis piece like this, right? So bad January doesn't matter because it's a presidential election year. That's why we wanted to start with the presidential year and talk about that. Now, the red January, and then we get back down, we didn't even get that big of a percent here. But because, I just want to check. Yeah, that was a pretty low close. And then by the end, I think it was like 20-some percent, 20.60. Okay. So 20%, 20% on that. I can't speak now. By the end of the year is massive still for the SP 500. But this is when, volatility kicked off in the last 6-7 years, and things just went from moving normally to what the hell candles, you know what I mean? And which is fine. We're just kicking the can down the road for a major depression downside. So presidential election years we covered. My favorite number one seasonality versus sentiment, the October, September, November reversals. January, also another one, but notice how the catalyst of the presidential election, where we started, number one, kicked that out. And we backed it up with a little bit of technical analysis. So any questions on that as we're half hour in? I want to peek onto that yet. How January goes, the year goes. That's correct. Yep. So how January goes, the year goes. A lot of the time, closing ends. So if January is weak, we have a high attempt to close weakness, but that only takes place during the seasonality outside presidential elections or bearish rotational years, right? And those rotational years, like I said, 2016 was the manipulation year. 17, 18, Trumpster lost in 20, right? But still, even with the pandemic, we closed massive reversal, the quantitative easing, and then had that first good year, right? But then seasonality presidency took over the January of 2022, which we know 22 is going to be bearish, and we called that reversal and bottom. Now, that is the seasonality of it, yep. So if there's any questions there, I'll give it 2 seconds here and check on the chat, which I'm half blind, so I got to first to get some glasses. Let me check my notes real fast here. Yep, third upside is always the strongest. We covered the third year of the presidential election. We covered the 2024 upside no matter what, unless recession. I think we'll move into our last little piece here. I don't see any more questions here. So you hear me talk a lot about Sentiment Trader. That is a website I'm going to log into here. Of course, it is. I had this up, but of course it do what I always do when I go back and close them. There we go. And we talk a lot about sentiment in the market. Bearish versus bullish sentiment. Pessimism versus optimism, okay? Where is my click here? All right, we'll just start with this one. So Sentiment Trader, just like the risk on, risk off indicator that we had just, or not really like the risk, it's more sentiment. We'll cover risk on, kind of risk off. And again, this is something that, oh, this is going to be bright. Whew. something that we use here on Sentiment Trader. If you don't know what Sentiment Trader is, it's an analysis back testing platform to help you with a whole bunch of indicators across the board. And these indicators are not technicals like a volume weighted average price or a moving average. These indicators are sentiment and percentage bias. So you'll get, they'll take options into consideration with seasonality, call to put ratios, excessive optimism versus pessimism, risk on, risk off being one of my favorites right here. And this, you scooch this over right here. I'll get 22 in there. There we go. So this indicator can, this kind of matches with AAII, bullish investment. So if you are familiar with AAII indicator, which takes a survey of how many bullish versus how many bearish, there is risk on off indicator is something I use with AAII. And we'll cover AAII very lightly since we do post this every single morning in the daily notes of the Boiler Room Trading Discord. And we don't really go over like how to use it. We assume that everybody knows AAII. It's 30-year indicator. It's pretty easy. The indicator itself, has been 20% no matter what indicator for 30 years. And I'll get into that when we touch on it. So risk on, risk off. So risk on, obviously in the bright red and tumbling under 30, this lower line right here. If you use a risk on, risk off indicator under this 30, this is where risk is on. This is where the market has extreme fear. Okay. I'm not going to go into how the indicator is built and blah, blah, blah. If you want to go the technicals of risk on, risk off, by all means, go ahead. But literally, it's in the name. If you want to know how it's calculated in the back end, super awesome nerd stuff. You'll have to go ahead and Google that or ChatGPT for it. So 2022, we knew was that presidential election bearish year. And then the risk on, risk off indicator told us when, the risks started coming off together in the market. The bottom of 2022, here's July, here's my 7, right? The lowest absolute point right here in July. We came to August, which came micro a little bit higher there. And I'm going to make it bigger so you can see what I'm talking about here. There we go. So July, worst case scenario, came all the way back up to the 60, but it's still red. Why is it still red? Well, the risk is still on. Just because the indicator is kind of resetting here, we haven't had all the technicals line up to change this line back to black, which is risk off. Risk on to the red here, lowest point of 2022. We know why it was 2022, presidential halfway point. October, right? What do we know about that? A little bit of the higher low in October. The fear is kind of dwindling, right? Risk is going to go slowly back off. And this is the higher low compared to April of 23 now, moving into that next year. If we scooch over a little bit, we got out of that and back into a healthy over 60, right? Black, no more risk on, risk off. Healthy market. That was July of 23, 1 year later. What does that tell us for sentiment and swing? Well, we already kind of covered it in the presidential term, but I just wanted to touch on the risk on, risk off, that when it goes kind of red to black, it sometimes has a dip back down. Reversal, you can see this every cycle, no matter what. I know it's going to look a little crunched up right here, but if we go back into many moons ago, to the 1820, it goes, you guys might not be able to see that. Huge deep reds, obviously 18. We know what that was. Halfway point, 18 plus 2 is 20. Presidential, all the way back to black, all the way back down. Every single time the sentiment changes from the half presidential election year and the risk is at its highest, that is the highest percent that I sell puts, okay? And these puts are a little specific. I only go about a year out. Again, this is just off of long-term stock holdings. There's a lot of people ask about the long-term positions. I don't really change the stock that much. I haven't added that much, but we do sell against. Now, sentiment changes, risk on, higher lows, comes into 2020, presidential elect year, 2020, guaranteed risk off, right? Every indicator is going to show you this. Again, you can do this from the MACD. I like risk on, risk off because it gives you a little bit of more of the psychology point of institutions, not so much just relative strength index or a MACD. This is institutionally driven. They use this off hype, fear, and greed because it associates with risk, right? So I'm going to go over to the Discord real quick, and I want to open up the AAI sentiment. And this is one thing that we covered a long time ago, but I'm going to touch on this. And if you guys get any questions for the ending piece right here, go ahead and toss that up. so I can get to it at the end if we have any. If not, not a big deal. So the Trade Exchange is a paid news service that I post every single morning, or a week, every Sunday night, Monday morning, right around there. And it gives us a whole bunch of cool stuff from the Trade Exchange. We're affiliates with the Trade Exchange, so they have an awesome news source. But when we post in the daily notes, I take off this little piece, and this is the U.S. economic calendar, and I post that in our Discord. And this gives us the weekly on the news, right? Gives us what's closed, what's open, blah, blah, blah. And the biggest data points that we need to worry about. Thursday's big jobs. If there's a CPI, a Powell, an ISM, obviously we get it, right? Gives you international economic data if you want to know what's going on. If China has PMI overnight, or CPI of China, Japan, overnight markets, Euro, France close, whatever you're looking at, this is very helpful. Now, when you go into their technicals, we're not going to go over that stuff. That's their own opinion bias. Where we're going to go is right here. The sector performance, fear and greed. So coming from risk on, risk off, I like to go into fear, greed, right? And when the market is fearful or extremely fearful, it's time to be greedy, right? Oldest Warren Buffett saying ever. And right now in fear, right, we're going through a pullback. So we know to be watching for the pullback continuation to find a bottom to buy, and we mix it with our seasonality and AAII investor sentiment. Now, this is a really cool indicator. It's been around again, like I said, 30 years. And whenever this has promoted like a 20 plus, 30 plus % difference in this stuff, it's a guaranteed buy signal. Actually, I'm not going to go into this, but we're already 40 minutes in this. We're going to go over the guaranteed buy signal of AAII in part 2. But for the standard day trader, AAII sentiment, okay, they come in, this might be hard for you to see, on a weekly survey. All right. And it's, of course, biweekly. So we see historically 1 year bullishness in the week ending of whatever week we're on, week ending in neutral, or 1 year high low for the year 2024. This is one of the biggest parts I look at for the weekly, because it shows me a sentiment on how many people are bearish versus how many people are bullish, right? Bears versus bulls. And in between is a neutral state, because people just sometimes don't know. One of the things you can do here is, if you have a MacBook, you practice on how to find stuff first. I thought I had it down. I didn't. Why won't it let me open that? Okay, fine. We'll do it on Google. I just keep clicking calculator, and it brings me to an app store to download a calculator. You know me and technology. My fault. So the weeks for bullish versus bearish. Let's just say we're starting, from the bottom up. We were more bullish when? 12/4/24. What is that? December 4 of 24, right? All the way to the end of December, coming into January, we have lost bullishness. We started at 48.3%, and we ended at 37.8%. The bears, somewhat a little bit more solid continuation. I'm never really that worried about the bears until it gets kind of way out of regular metrics. Like if it goes way one-sided, like a COVID pandemic look. And again, we'll cover this in part 2 because I want to dive deeper into this. But what you can do here is sentiment between the two. So if you take like 48, you minus that by the bears, 30, you just round down, round up. It gives you about 18%. We're not going to worry about the neutral state. If this number between, all I did was I minused 48 to 30, right? The bulls versus bears. That's all I did. And I got 18. If this number is generally over 20, it's like a guaranteed one-sided, so the bulls would win. Right now, it's very close to that. But if this is over 20%, it's a absolute gnarly indicator that helps you with overbearing sentiment of what people have. It could be in the delusion. It could be, just the grandeur. It could be whatever's going on in the world of promises that are being fed to the retail general public that gets the survey. That's what it is, right? So I just want to touch on the technical analysis versus AAII. We started very, very, very bullish, right? And then it slowly winded down week by week by week. But the takeaway from AAII is if the percentage is consistently dropping, it's not giving us just like a neutral boring reading like the bears. This is a neutral boring reading, but that's not telling us that fear is coming because bears. It's the end of the indicator. It's the worst part of the indicator. The bull part actually tells us more about the bear part than the bear part does. So if the bulls are going down, the bullishness, right? And the reason for that is because they can end up in the neutral space. The bearish space is generally you don't want to be overly bearish on the market anyway. A lot of people don't overtake themselves in pessimism with the market. They only go from neutral to bearish or neutral to bullish. Okay. So as we started going down from 40% and lost 11%, damn near about 10 and some change there, from the start of December to the end of December, right? That steady decline can also help us with the sentiment of coming into a day trade. And it's just as simple as that. So if we're starting the week super bullish-ish here, and then it closes that first week and a half, 2 weeks, and we start to see the bullish percent drop, we know that continuation for that month it could be probable, right? And all we're doing is taking that sentiment and we're matching it, right, with how the market's responding. And did we see that, right? Did we see the bears kicking in? But interestingly enough, it was a lagged indicator like the MACD, no? Because if we look right here, the start, here's 11 going into 12, right? Here's 12.5. Did it lag much? Not really, but still really good. Let's go to 12.5. So right here, 12.5 at all-time high. This is right where the bullishness started to stop, right? What other psychology catalyst was coming up where the bulls were like, okay, we now have a question mark. What's a question mark in the stock market? Something that can raise fear, raise hype, and raise greed, right? Big old question mark. What's to come? That's the biggest part of the scariness. What's to come? The unknown. The Powell man was coming out with the rate cuts. So the AI sentiment went from, hell yeah, extremely bullish to, oh shit, we got Powell next week. Let's crank back bullish. Because why? Well, sentiment and psychology is telling you we're already at all-time highs. How much bullish coming into a guaranteed rate cut could you be? Well, not very, right? The AI sentiment told you that. And for all my premium members, we're going to touch on AAII weekly now in the pre-market breakdown. I'm going to bring up the trade exchange, and we're going to go over it, and we're going to dial that in to the market and see how we use it on a week-to-week basis. So we're going to add that in. But just AAI telling you right here, all the bulls were stepping back to more of a neutral standpoint because remember, notice we increased bearishness by a whopping, 1.4, 1.2%, 1.3% for 3 weeks. So it wasn't so much that they were overly bearish for the next 3 to 6 months. Like it was deathly because it does go out a little bit. It was for the week ending. It was indecision of the Powell man. Now you can see that happen on AI because of that decision. Do we have any questions so far? I'm going to check the old chat here as we've made it about 45 minutes. I leave a couple minutes left open for sentiment. Appreciate you guys for tuning in and sticking out the big pieces there as I fumble around on live because I'm not an influencer. This is just a good amount of fun for me, I think. Hey guys, what's up? As January goes, yep, January tells us everything. Absolutely. 100%, my friend. 100%. And let me know if you guys want me to extrapolate or go into detail on any one of these pieces. You can just comment on this or shoot me a Discord message. I'll make separate videos over the sentiment again, and we're going to go into deeper examples as well. But during the live here, I wanted to do like questions, concerns, and get everybody on the same page with some of my favorite seasonality pros and cons, and definitely presidential election year because we're obviously in a large one, and that is a kind of a given, right? But remember, the stock market always does that until it doesn't. It's one of my favorite sayings. We got to be careful. We got to be careful. I'm going to make sure we don't. Nice. Nice job, Pete. That's awesome. I love it. It's the best cat in the world, the tiger cat. Sweet. All right, friends, I give it enough stream tag like no big questions. That means I think we got through her with at least some understanding, right? I didn't mess up too much, right? Is that a plus for the teacher? Well, thanks for tuning in to the Saturday stream. Anybody that's a member obviously knows this whole ending spiel. If you're not a member, if you just tuned in and just hopped in for fun here, we do stream live every single day, Monday through Friday, that we can. Me and my partner, Connor. If any of the stuff you've seen here interest you, we break down full day trades as a future scalper, options and swings when we get them. long-term sentiment and answer as many questions as I possibly can moving forward with technical analysis as I can. So if there's any questions about any of that kind of stuff, the link is in the description of this video. If you want to join us live, right? Come hang out with us and do the jam. What do we got here? The link is in the description if you want to. If not, tune into the free YouTube videos. We'll be doing this every Saturday, and we're going to elaborate on a couple of these things here. You have a great weekend, too. Are we expecting more bullishness? I wish, my friend. I wish. We can touch on that real fast there for Terry for is we expecting more bullishness. Now, as we cover on a day-to-day stream, for bullishness, long-term sentiment, I have no reason to say the stock market is going to drain out and go into a bearish metric. Even if, I'll get into this in part 2, Republicans take over the office versus Democrats, and we're going to get into more seasonality with that on the next stream. But right now, Republican takeover, it can be a little bit slower, but again, we just kind of shied that 100 EMA and we're on trend. There is nothing in this market except for just regular corrective, movement that I see that the bull run is over. I myself, personally, from right now into 2025 start, am still bullish for the next 16 months to 14 months. I'm going to give it a year and some change there, a year and a half, okay? Until something changes, something catastrophic has to knock my psychology off that. We need some kind of world shifting news. If I see something go into, crazy different war, the next pandemic, society collapse, then we'll talk about it. But right now, there is not one thing I can see that is literally going to knock this market off quite yet with the readings. Not the yields, not the inverted yield curves. All the most bearish statistics are still, even for a collapse of correction to recession, are a minimum of 8 to 12 out months, 8 to 12 months on every indicator. I don't care if it's, the yield inversion, I'll go over all that in the next, part 2 sentiment yields as well. But no, I don't see any kind of bearishness. If we get a correction, I'm buying it, plain and simple. So in the last couple of recaps, watch the YouTube recaps because I actually go into long-term predictions. A lot of the time I'll veer off onto tangents. I'm an 8 to 12% kind of guy. So from all-time highs, a correction of 8 to 12%, I would love to see. Well, that lines up with our technical analysis of running into the 200 moving averages that we have not done yet on the SPY, right? We shied the 200 down here, shied the 100 here, kept moving on. So even if we break through the 100 EMA, snash into that 200, I think the 200 is going to bounce and it's going to cause a buy for at least 14 months. You heard it here first, all the way to 2026. Until that changes, until some kind of, if I see a giant war, a giant collapse, a huge marker, I mean like recession flashing indicator that you don't see, that's not fear driven by half these YouTubers, then I will post it. But right now, nope, absolutely not. Straight up. I can't see a single thing. I'm just looking for pullbacks to buy. And when you see the market go down, if you are a premium member, you will see me. I told you I would show you where I'm going to sell puts coming into that 200. We're going to correct back down. I'm going to start selling probably into those low 500s, 530s for another 6 months on puts or, against the stock. No problem. General drift of the market is historically up. Yep. Within swings more often than down. Absolutely. It's much harder to be a bear, especially long term. Because at any shot in the dark, if you would have shot, it doesn't matter, throw a dart, and you would have bought and you would have waited outside of recession to recession, 20 years, you're still green. It is much harder to be a long-term bull. There's always on trend. Like it's always the next world-ending catalyst, and then boom, we're at all-time highs. Even suffering through the biggest recessions of our time, or historically ones that I had to research since I wasn't even there trading yet in the 2000s, the dot-com bubble, the housing crisis. I started right after, when everybody was talking about it, and I'm like, oh, what does that mean? What's crazy in the market? I started right here, and I was a novice trader and somehow still read. Losing money in a bull market after a quantitative easing, which I, didn't learn till later. Are you planning on updating the Elite's videos on Teachable? We are. Yep. The Elite's Teachable. I'm actually working on it right now on the back end. Every Sunday I make 2 videos. And if you do hop in, the indicators that we use here on YouTube, that is as far as we are on the live trading for 1 and 2, all of the stuff that our boiler room trading entity is, I'm putting out on YouTube, but you got to show up to the live streams to get most, because a lot of the stuff in the video lessons and a lot of stuff that I did release algorithmically, gap, anything associated with a lot of our trade plans that we had over the years, it kind of got compromised. Every time I put it out there, even to video lessons on private group, within 6 months that trade style was gone, and I've had those for years before I taught them. So tinfoil hat, The algos are listening. The big boys are listening. They get everybody eventually. But yes, I am updating course material for that. And, well, I guess I can announce it here too, but I'm partnering up with a buddy, Casey, and I'm talking to Connor and having a little bit meeting. And I promised you guys I wouldn't sell a course, and I'm not. We're going to give it out to all the premium members. But I'm going to sell a separate course myself, but it's going to be a 100% donation to child cancer and cancer patients around because, as most of you most likely know, that I just got over a cancer-free result, stage 3 colorectal cancer. Barely making it out there with a 70-some% chance of major surgery, lost a lot. And over those years, I met a lot of people in a lot of scenarios that weren't me, that were hurting a lot more than me, that I'd really like to help. So I thought that'd be kind of cool to build that course, but I'm not going to take a single penny profit from the course. We're going to actually donate it to people struggling in cancer, especially children. So I am working on that, plus the elites. Every single week I upload, I remake one video. I got 6 so far. I know it's going to take some time. I know I'm slow. I don't do this full time with 100 hours. I have to run my other businesses, all my rental properties still. I do have a lot more time to do this now to stream and help out, but I am slowly going to, move into that, and we're going to release that. I thought that was a good idea because a lot of people want all of this stuff in one course to review. So one video a week right now I am making, and I got it all on the video library on my drive over here. And might not be the most perfect course ever, but it'll be every thought that I've ever had of the stock market ever, from psychology to how to journal to whatever. I'll get it done. I'm not an influencer, as I always say. I'm not out to sell a course to make money, so it's not something that's a rush to me. So I apologize if it is on the back burner for a lot of things that are coming out later on. But again, I promise showing up to those streams every single day and asking any question about any trade style you see me articulate on stream is a great way to start, great way to get a head start on a lot of that learning. No problem, guys. Thanks. Mile and holding cash. For long-term assets, I haven't touched a single thing since 19. I've been sitting on over 40, 50% cash right now. We made a lot more money futures trading this year than anything else, and I'm gonna pile into a 2025 dip, and I will always alert long terms. We haven't had long terms in years, actually. I haven't added since the 19 because I waited. I sat on cash. We did some swings here. We did puts and sells, and we called the bottom 22. But I missed most of this piece right here. I will not miss the end of 2025. So when we get that correction, I'll be back in, and I will update the buys that I do. Absolutely. Look at the 200 of the long-term chart. Big brain. Yep, 100%. The big brain discard. There's lots of lies because I work full-time. That's a massive. Oh, absolutely. Yeah, I wish I could, help with that too. And, what I should do? I'll talk to Connor about, starting to just record every single live, because we talked about that too. And we could upload a private video course lesson for our members to literally watch every stream that we do. We should actually do that. That's a really good idea, because then we could also go back and look at my predictions of pre-market. We can learn from our reds and greens in whatever we happen to do, and I think that's a good idea. So yeah, let's move into that. I appreciate it, Beezer. Yeah, I think that's a really good cause too. And I've seen when you go into the cancer clinics like I had to, and Mayo Clinic, and you see kids doing the same thing, that you had to do that are. Those are some strong freaking kids, man. I can't even imagine. It was hard enough for me. And then as a father myself, and watching that, and they're struggling with not only physical impact of close to death, like financial impact, because you get zero help from there. And that's, we're just going to do one of those cool, big, fancy checks and big donations that we like to do, because it's, the hell's the point? I don't need any more money. I make money trading, so I don't sell courses. I don't have a $5,000 course you can buy. I don't even care about making them. I could shut down everything right now and be completely consistent like I was 7 years ago before Connor pulled me off to try influencing and live streaming. It's not my people are not my forte. They're interesting creatures, right? Or this rather, the fakeness of social media is not my forte. I shouldn't say people. I love people and the normalcy of some, but I just I have a lot of compassion, and I don't believe a lot of this influencer stuff hype. It's just not my jam. So I don't need any of it. I'm an actual trader. I don't sell any of this crap. Like, if you want to see me trade live and benefit Connor, we pay a little bit on BRT. We pay to create a good community. Sure, I think it's fantastic that way. But I don't think it should be for everybody. Trying to read here. I appreciate it. I appreciate it, Divvies. Yeah, it was a long couple of years, and I really appreciate the community for staying true and hanging out with us, and not going through or having to go through the ups and downs of streaming and not streaming and sick and not sick. If you get a chance, what's your view on SSR affecting its day trades and its benefit? You talking about like social restrictions? We might be able to cover that in a different video. The live stream, I'm going to stick to sentiment and just kind of on the off. But if you're talking about short sale restrictions on like, benefit of trading like volatile penny breakouts, that's a counter question. He's amazing at that. But hopefully you're not talking about anything else. You could elaborate if you want. What's the difference between what's on and the new? Well, right now is the old stuff. So a lot of the old stuff, that systems that have been compromised by, call it Skynet, call it whatever you want, the algos of the market, the big boys. So a lot of the video lessons are just years old. I want to do an updated course. If you go in, you're going to learn about, first VWAP tags and 50 EMAs or SMAs crossing over the VWAP, overlay trend lines. These technical analysis indicators, they work very well, but there's some things that we moved into in this style of trading for futures that a lot of those other choreographed trade styles and indicators were developed off stocks. So I'm moving towards more ETF only future bias trading, where I found the most help in these indicators, because I think I'm going to be a futures trader. I'm kind of done with stocks and day trading those. I've made more money day trading futures with zero margin or with other people's money through prop firms than we ever have. So I don't think that we're going to have to really go back to that. And a lot of those old indicators just need to be updated as far as what I'm going to do for long-term swing and sentiment. I'm going to stick to my long-term building, like the course that we put out. All of it's going to be pieces of this sentiment, seasonality, and what's going on in the world, and how to pick stocks up off psychology. The next part 2 is going to be how to pick those stocks up off of news blips for fear, hype, and greed. I'm very big on fear, hype, and greed. You guys know that. And I'm going to teach you guys, like when a war headline comes out, what stocks pop, or JFK Jr., being with Trump, he's on board with, the health. And then you've seen MNMD, psilocybin, weed stocks, Whole Foods all pop because of that. I'm going to teach you guys the psychology of correlation with that in the next. BRT. What's the difference between? Yeah, the course. St. Jude's part of that. I don't know where I'm going to be donating it to. I don't have a specific place. I'm going to pick probably a child cancer one. No, I don't want to be a Patrick or a Cameron. No, I don't. It's not my calling in life to be an influencer, shoving courses and screaming at people on video cameras on the internet. It's not my calling in life. It took me over 4 years to become profitable of Better Me. I lost $20-some thousand in the first 6 months of my trading, being a cocky idiot. And I was a mechanic at the time. I owned a shop and a business, wrenching, and then I did bartending on the side at that point in time, and that was a lot of money to lose for somebody. And I decided to do that 4 more times. I lost 20-some thousand. It's probably a year. I set aside 20 or 30 grand. To that money I could survive without losing, and I lost every penny of that for 4 years straight. I had green months, don't get me wrong, but then emotions would come in. I'd kick myself. I would chase res. I would do all these stupid things that we talk about on stream sometimes, and I would screw up the entire thing. It took me over 4 years. I'm not one of the super geniuses that figured this stuff out in 8 months. It took me a very long time. You don't want to be Patrick. No, you're down to earth, realistic personality comes through. I appreciate it, Visa. Yeah, I just I can't. It's not one of those guys, man. Short sale restrictions. Yeah, we can cover that. My buddy Connor, he's actually the partner here at Boiler Room Trading. I've watched him make 20, 30, 40 grand chasing those pre-market hyper-baric penny stocks. I'm not a penny stock trader. You won't even see me trade stocks. You will see me trade futures, because I can make way more money trading futures than I even can penny stock squeezes. Look up how much an NQ contract is worth. You get 5-6 of those bad boys, 5 contracts, $100 a point on NQ. NQ moves $500 some days. And that's only a single trade. We take a lot of scalps here. Love trading stocks, but I'm not good at SSR strength. That's not my forte. I wouldn't even want to steer you in the wrong direction. My partner Connor, though, he knows a crap ton about that. You can see his old live streams doing 30, 40 grand greens live on TOS, even with short sale restriction, borrows, all sorts of stuff. He's fantastic at that. I'm not the best teacher for that one. Futures all right as long as you're disciplined. I agree. I said it before, the best trader I've seen in 30 years of this stuff. My attitude and personality. I don't know if I'm one of the best, but my attitude and personality is what saves you in the stock market. That's it's psychology. It's like it's a test of red versus green, and your personality and how you handle a red day develops your entire trade personality. If I wake up and I get a red day and everybody knows that I got a red day in my life, I have failed as a trader. If my kids know, my family knows, all my friends know, I go to my other business and I'm just pissed off and kicking shit around. Like, what in the world does that solve? Did I used to do it? Yeah, it bent me all out of shape. Of course it did. It took me years to beat that psychology, literally years. I almost gave up 4, 5, 6 times probably. And I was like, "F this." And I just took like big 3 to 6 month breaks. And I'm like, this ain't for me. I'm retarded. Like I'm diagnosed retarded. So I can say the R word. Don't cancel me. I have the sheet if you want to see it. I have a fancy autism where they put me in learning disability classes when I was young because I wouldn't talk to anybody until I was 4. So they thought I was retarded. I got the R word on lock. You can't take that away from me. Okay. So, but yeah, they put me in LD classes way back in the day. And this took me a very long time. And pattern recognition with the autism actually ended up being the superpower that I needed for the stock market, which is crazy. I joke about that a lot on stream. Maybe I'll touch a little bit about that Sunday when we got more time. But honestly, it's a blessing more than a curse. That gives you hope. You're a mechanic. Down on 50K. Been there, brother. Been there. I was turning wrenches but I obviously, better than anybody else. I was taking on side works. I don't care if you clutch strands, throw a diff in a truck, rear end, doesn't matter what it is. I was doing it on the side, plus going to work, trying to make all that money back. And I got sick of myself after a couple of years. Eventually, you hit a point in trading where you get sick of yourself, and you're just sitting there, you're going, what the am I doing? Like, I have to, you are so sick of yourself, you get a breaking point, and that's it. You mentally shift. It took me a long mentally shift, don't get me wrong. I'm a slow learner. I'm by no means one of these genius pros on here that, everybody and their mom claims to be on YouTube with their fancy indicator. I don't see it. Are your trades based on indicators, or do you also use price action and other factors? So Kevin asked, how are my trades based? Now, I use a mix of catalysts. What worked for me, and one of my specialties here trading the stock market, is helping people identify what their trade style is. That has been one of my biggest accomplishments trading for myself and other people. I can identify what people lack, this freaking thing, in their own trade style and kind of help them work through it, because I've more often than not struggled in the same place. So indicator uses, absolutely, I use indicator based. My biggest ones are algorithmically based. So if you look at any recap I've ever done, any live trading I've ever done here, there's some live trade examples here that I show you algorithm breakdowns, and I show you exactly where I enter and exit. They're price levels, right? Patterning, not so much. I'm not huge on patterns except for the number 3. If you've watched the stream here or just were a part of the live stream here, I'm real big on 3 down, 3 ups, just because the market loves things in threes. Now, it's not going to be very easy to find this in the last few days of trading because it's been absolute booty. But, let's say like the downturn right here, it was 1 down, 2 down, 3 down. That was the end of the downside of the market's consolidation. So that's as far as I go with patterns. Technical analysis, you will see me use moving averages and algorithms first. This is an algorithm. Lots of things are algorithms. It's the computers talking to each other. I have a very good understanding after 10 years on how these can play out. So Fibonacci, right? Technical analysis here, just to support resistance. And we use the golden pocket. This is one of my number 1 strategies here. Technical analysis, we fib out the fib box, and we watch price action flow from the center of that fib, which is what we call the golden pocket, 61.8 to 38.20. This is the golden pocket. Now, if you notice here, look at trend, right? And I'm fine with trend. Trend is trend. That's number 1. That's price action, right? But we got caught in the fib, and I'm not going to break this down too much, but we snap down, confirmation resistance, golden pocket, lower low. That's huge. Technical analysis, pattern breakdown, structure, back up, resistance, double top from the golden pocket, continuation sweep all the way down to target 1618. And we actually called this one on stream as well. And we also called this one on stream all the way back up. And that was based off the same exact Fibonacci. We called right here for long. Anything above the golden pocket, we moved to target right here. And I actually called that ahead of time on X as well. If you want to follow me over there and give it a shot. But yes, we do technical analysis along with sentiment, along with patterns. And I'm very good at VWAP, Fibonacci, and algorithms have to do with gaps. My main flow indicators are oscillations, so I use RSI and MACD together. My main trading style takes all of those things and stacks them together. And what I mean by that is, hey, is trend up? Are we above the VWAP or below the VWAP? Are we on the top channel of the RSI, right? So if we're on the top channel of the RSI up here, we are more likely to be in a uptrend. If we are on the bottom side of the RSI, we are most likely to be in a lower trend, right? Or a downtrend. And what I do is I take each and every one of those catalysts and I stack them up against each other. I have 8 things telling me that I have the bullish upside. We are above VWAP, above 100 EMA, higher low, higher highs, great volume. We're above the daily Fibonacci, 5 things bullish. And then I look at the bear case. Do I have seller volume? Do I have a moving average to catch up? Do I have a big resistance coming up to turn around? We only have 2 bearish versus 5 bullish. I'm going to stick to the sentiment of bull side. So I take these indicators and I mix them with algorithms and how the computers speak to each other and their personality. The personality between QQQ and SPY in futures is something I can't really explain. You're going to have to watch me narrate it live. It's kind of the only way I can explain it. I tried my best on every single one of these recaps that we put out on this channel to cover what these algorithms do and the personality of a 10 SMA loop, right? That's one of my, let's say it's not an indicator. It's more of a personality trait. And not a lot of people understand what a loop is on a moving average because it's something that I found myself. If it exists, I didn't create it if you found it before me, but I certainly didn't find it on YouTube. I did this myself. So like price action right here on an indicator, the 10 SMA breaks back up, breaks under the 10 SMA is blue here. Sorry. Price action breaks over this 10. Price action loops under it, recovers and squeezes, right? Now there's certain things that you'll hear me saying the other, what constitutes a loop, how many candles underneath, the speed. I cover all that on our live day trading and I walk everybody through these live trades that we take. So I do happen to do that quite a bit. So yes, I like to use both. Learned a lot from the stream. Had to end my session, but hopefully I can join back. Yeah, that's no problem, man. I'm glad you took it up for the stream. And if you don't have, if you're ending subscriptions or anything like that, else, just ask questions, comment on YouTube. If you don't pay for anything, because if you ask a question, I'll just cover it. You know what I mean? As long as it doesn't give away an elite system. The only thing the premium membership's for the we usually hand out discount codes left and right. It's like 80 to $100 a month with a discount code, $25 a week, and I feel that is a decent rate. I think what we put out for at least even a couple of trade calls a week probably covers your month, if you do it correctly here, or at least the knowledge. But ask it, just comment, because I'll cover it in a video, or I'll answer it via text and then I'll add it to the next video. Because the more people comment, we get a community of like normal, like-minded, not Lambo flashing, watch flash traders. I don't do any of that kind of stuff. I am the most boring, probably trader around. I don't have anything to show you. I got some cool cars that I built and a couple of cool bikes, but I don't know. I don't care about any of that stuff. I care about like doing this. This is what's way more fun. What I have doesn't matter. What I can provide definitely matters, because the more you put out in life, the more you get back, man. And why not build some good karma with a bunch of cool people in a community? Sounds great to me. With futures, and you have the alleged protection from yourself. It was like PDT versus nonsense. Market futures are great for small accounts. This one. Yep, and what Rob's talking about too, if anybody's watching comments there, Rob has a ton of history in this. He's great with options. Part of our community, admins a lot of stuff, answers questions, and futures are one of the best things I've ever kind of came across. And it's kind of Rob's fault we came across them too. I was always a stock trader, options. We did fine doing equity, and then we moved into futures, and a lot of our futures trading, I've never seen anything like futures trading. No PDT, crazy easy margins. I can keep 10, 15, 20 grand in an account instead of 200,000 to, day trade stocks. Instant resolutions, small margins, very small fees. I can wake up every day and I don't have to go through a stock scanner. I don't have to chase down a whole bunch of news pieces, or I have to read a bunch of earnings reports or what PE ratio each stock has. I can come in and go, oh, where's the Q? Where's SPY? Support resistance weekly on the fibs. What's the volume? What's the news piece? Because we're going to go over to our premium Discord and boiler room trading, and we got our news pieces for the day. We got our sentiments for the day. We got cats. We got everything here, and we walk through our premium Discord with trade ideas with a monster of talented people. So as we moved into futures, that just became the norm. And I don't want to go back. No more. I'll trade options and stuff in the long term. I'll just buy. But day trading futures has changed a lot of my perspective on just trading in general. And it's like 5 years now, 6 years, whatever it was. I forget what it was. Maybe it's 5 years ago we switched to futures, but we took very seriously futures probably the last 2-3 years. It's been great. Love them. I can't get enough. I only have to wake up and watch a couple ETFs and the VIX, and I got to watch a little bit of world news. I don't got to go through tech reports and scanners. And if, Apple's new phone blew up on stage when they were, watching it, all those things can affect futures. Sure, it's a Magnificent Seven stock, blah, blah, blah. But I still, the ETF is my friend. I like to stay on SPY and QQQ, and I actually trade the futures off of SPY and QQQ when the market's open. I trade ES off SPY. I rarely look at ES as a technical indicator at all. I actually use SPY 24/7, and I haven't found a better place yet. Cats are the best, absolutely. No problem, Kevin. Most humble and disciplined traders I've ever come across here. Nobody else. Oh, thanks, dude. I appreciate it, man. Yeah, I don't know, I don't know how to take that. Those are the comments I kind of live for, Like, and if you want to know something, just ask. I would gladly cover it because I don't know what you don't know, right? And we can not know it together. If we don't ask about it, we're never going to know it, So let's get on to, comment as much as you can on the channel and just tell me what you want to know. We'll cover it. And if I don't know it, shit, I'll learn it and try it because I love doing this, learning and new perspectives, new indicators. A couple of my buddies here keep beating me up over. What do you guys make me look at? Bookmap. Everybody, Brad, go look at Bookmap. It's high lows. It's volume. It's brick walls. I'm like, dude, I totally get it. I tried. I suck at Bookmap, but anything new too. I'd love to cover it. I'll give it a shot. I'll throw it on the screen, man. Foreign selling Apple's time. Yeah, for sure. Well, I appreciate everybody tuning in today. This was every Saturday lesson. Anybody that wants to join us, we're going to be here every Saturday at noon Central Time. We're going to come on. If you got questions, we're going to cover Sentiment Part 2 next week, okay? Sentiment Part 2. And what we covered today was seasonality versus sentiment, presidential election versus a couple favorite months. If you want to rewatch this, go to a couple key points. Any questions, please comment on it so I can cover it in Part 2. Any comments you have or questions, I'm going to write down. We're going to cover those in Part 2. If I missed anything, if anything that makes sense, maybe I said something wrong. We'll cover it, recover it, readjust, okay? So everybody, I appreciate you guys tuning in. I hope you guys have a good rest of the weekend here. If any of this sounds great, you want to trade it, this link is in the description with BRT. And if not, tune into the freeze, man. Go to YouTube. I'm going to be here every single day I can on YouTube, which is going to be probably every day now, Monday through Friday, as we're back off holiday schedule. And we got a lot more time. So thanks again for tuning in, everybody. I hope you guys got a great rest of the weekend. We'll see all of my premium chat fresh Monday morning.